Hi Sabrina, do you know what is SME?
I don't know anything about SME, Anis. Can you explain it to me, please?
Sure, let me explain it to you. Small and medium enterprise, SMEs play a major role in most economies, particularly in developing countries, such as generating income, employment, innovation, and facilitating social cohesion. The majority of Malaysian SMEs are micro-enterprise, up to 77%, and the bulk of these businesses are concentrated in the service sector, which is 89%. In terms of legal setup, SMEs mostly operate as sole proprietor, which is 61%.
Financing needs of SME. Obviously, banking and financial services are important to small and medium-sized enterprise. For one, they provide financing for business to start, sustain, or expand. So the financing needs are starting a new business, business expansion, working capital, major asset purchases, and needed for cash. For starting a new business, initial capital needed to setting up business. For business expansion is to avoid spending too much capital on one aspect of their business. Expanded operations usually repay for the loan from additional business profits. Thirdly, working capital. Small business may need working capital at some point during their operational. Many businesses face low cash flow issues. Next is major asset purchases. Major assets include facilities, equipment, and vehicle needed to complete business operations. This is to avoid making personal investment on these items. Also will bring future economic benefit for business. And lastly, needed for cash. Small medium enterprise need cash for everyday transaction.
So, what is the causes of financial problems in SMEs? It is lack of capital. 40% of the responses stress that the main aspect of financial weaknesses in running their businesses is capital insufficiency. Many factors go into a business: honest lack of working capital, from a low credit score and inability to borrow from traditional financing sources, to operational issues affecting cash flow. Companies may price a product or service far lower than similar offering with the intent to entice new customers. While the strategy is successful in some cases, businesses that end up closing their doors are those that keep the price of a product or service too low for too long. Small companies in the startup phase also face challenges in terms of obtaining financing. The investor, venture capitalists, and conventional bank loans are among the myriad of funding sources available to small businesses. Not every company has the revenue stream from these sources. Without an influx of funding for large projects, small businesses are forced to close. So, what is the other causes of financial problem of SME? I think the causes is lack of accounting knowledge. The problem is not many SME in Malaysia are adopting financial management tools because some of them are found to have a lack of internal accounting staff who are responsible in accounting methods. SME also having a shortage of accounting skills and lack of infrastructure in order to implement accounting regulation. Some managers have a low level of understanding in such knowledge, which in turn could bring serious consequences to the financial stability of SME. In the circumstances, not only the managers but also the directors are found to have poor level of financial awareness. They do not understand the information, and financial information produced is of low quality. Thus, a lack of accounting knowledge may bring detrimental impact to the financial viability of SME, since both managers and directors have low level of financial awareness.
Measures to ease the financing problems of SMEs. These are the measures to ease the financing problems of SMEs. Government aid. Governments have adopted two responses to increase the attractiveness of SMEs. First one, making shares marketable, which means the development of small firm markets is designed to bridge this funding gap and provide venue for further fundraising. Second one is tax incentives for investors, which means that when assets purchased by SMEs, usually government will give exemption for taxes. Loan scheme. With little security and banks being risk-averse, they often guarantees over the loan scheme are needed for small startups and high-growth SMEs, as long as the company meets the requirements such as gearing. Government grant. Government can also offer grants such as for employing staff in certain industry and regions. Venture capitalists. Most major providers of finance have specialist venture capital funds. They provide capital, oftenly it is up to 5 years for startups and high-growth companies. However, they don't often invest for smaller amount, so for smaller amount, a business angel is needed. Business angel financing. Business angels are wealthy individuals who invest in startups and early growth businesses and get shares in the startup. This is therefore a high risk for an angel, and so high returns are needed. Supply chain financing. This simply means taking credit from suppliers, typically 30 days. This is very helpful to new businesses. Typically, suppliers to new businesses will want some sort of reference either from bank or from other suppliers. However, some will be prepared to offer modest credit initially without references, and as trust grows, this can be increased. Crowdfunding. Crowdfunding has become increasingly popular in recent years, where SMEs take advantage of the internet to reach individuals who individually could not provide sufficient funding but as a whole together can. Companies show their products, their business plans, and latest financials online, and potential small investors can then decide whether to do investment or not. Sources of financing for SMEs.
What are the potential sources of finance for SMEs? Some of the SME financial sources are the SME owner, family and friends, the business angel, trade credit, leasing and listing. The SME owner, family and friends. This is potentially a very good source of finance because these investors may be willing to accept a lower return than many other investors, as their motivation to invest is not purely financial. The key limitation is that for most of us, the finance that we can raise personally and from friends and family is somewhat limited. The business angel. A business angel is a wealthy individual willing to take the risk of investing in SMEs. One limitation is that these individuals are not common and are very often quite particular about what they are prepared to invest in. Once a business angel is interested, they can become very useful to the SME, as they will often have great business acumen themselves and are likely to have many useful contacts. Trade credit. SMEs, like any other company, can take credit from their suppliers. However, this is only short-term, and indeed, if their suppliers are larger companies who have identified them as a potentially risky SME, the ability to stretch the credit period may be limited. Leasing. Leasing assets rather than buying them is often very useful for an SME. as it avoids the need to raise the capital cost. However, leasing is only really possible on tangible assets. Listing. By achieving a listing on a stock exchange, an SME would become a quoted company, and hence raising finance would become less of an issue. However, before a listing can be considered, the company must grow to such a size that a listing is feasible. Many SMEs can never hope to achieve this. Those are some of the sources of financing with their pros and cons for SMEs. Thus, accountants and advisors are really useful for the SME to decide on their financial sources.